In terms of pros and cons of using the GP and LP structure, let's think about this from the founder's perspective. I'm George Duby, saving the world from tax, one bow tie at a time. First, and again, different people will have different areas of focus, but it allows the founders, probably speaking, to be getting involved in larger projects, perhaps even more diversification than they otherwise would be. It allows the founders an opportunity to control the project. It allows the founders an opportunity to have one less reason for an investor to say no, because they're going to be able to tailor their own specific tax and legal situation to their best benefit as compared to the structure you may be otherwise creating. That flexibility may allow for you to really get the attention of more investors. An add-on benefit for founders of a GPLP structure is what the structure itself could change into down the road. It's possible, perhaps it sounds frightening initially, but it's possible we may want to change into a private REIT, a real estate investment trust, maybe even want a public one down the road. But starting with a GPLP structure allows you to more tax efficiently, potentially, depending how you're trying to do things and what you're expecting for those initial investors, it may be more tax efficient to change or to evolve into that private REIT. And it sounds intimidating, I acknowledge. The REIT may allow you to get after registered funds. Think of RRSPs, TFSA money. The REIT may also allow, quite simply, just more investors to be coming in. It also clearly is a different status, so there's more cost, unquestionably, to setting up a REIT and maintaining the REIT, significantly more than just a GPLP. But the GPLP structure keeps doors open for that tax efficient change that might happen down the road. On the opposite side, there's some more costs involved, no question. A little bit more of a pain in the rear end factor in using that GPLP structure. There's more costs as a result of the complexity, but if that's the difference between getting a project on or off the ground, the cost is relatively minor, particularly if the founders are using this as an opportunity to build a framework for future developments and future projects. You're going to be forced to use December 31st year ends from a practical perspective, and the deadlines for reporting are going to be tighter as compared to using corporations. That all said, if you're using other people's money for your investments, it's not like you had a lot of leeway if you're using a corporate structure, for example. This is simply going to ensure, essentially within 90 days of the year end, your reporting is ready to go. If you want to learn more about this topic, check out our GPLP playlist or head over to my website, georgeeduby.com. No question, this series of recordings on the GPLP structuring is very high level, not a lot of detail. Please feel free to reach out, set up a time to talk further, and we can get into the nuts and bolts for what's right in your specific situation. Have more questions? Please subscribe, follow, and even share. I want all of us to have the tax information we need to do wonderful things.